makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, it's been another week dominated by Trump, tariffs, and tech. We're joined by Christian Keller, head of economics research at Barclays Investment Bank, to discuss what it all means for markets. But first, U.S. President Donald Trump says he will follow through with 25% levies on Canada and Mexico starting tomorrow. It's a move that could lead to a trade war with the two biggest buyers of U.S. goods, and is part of the president's efforts to reshape supply chains and shrink trade deficits. Now, Trump also has his sights on China, but is considering an exemption.
Mexico and Canada have never been good to us on trade. They've treated us very unfairly on trade. And we will be able to make that up very quickly because we don't need the products that they have. We have all the oil you need. We have all the trees you need, meaning the lumber.
Now, for more on all of this, let's bring in Bloomberg's EMEA News Director, Roz Matheson. So thank you both for joining us. Roz, I feel like 80% of our A-waves is really what Trump is saying, what he's thinking. When's he actually going to do policy?
Well, a lot of it seems to be still in flux. We know that some of his advisors were having very late-night meetings overnight, which suggests a lot is still not set here. So what are we going to get in an announcement that may come this evening or into the weekend? Are we going to get just a blanket tariff on everything? That seems to be unlikely. Are we going to get targeted tariffs, perhaps on things like steel, but exempting, oil, gas, even autos? And perhaps with the grace period, does Donald Trump say, I am going to impose these tariffs, but maybe in a month from now, which is really allowing time for negotiation? Or does he say, actually, I got some stuff from Mexico and Canada overnight and I've changed my mind? He is very mercurial. He's someone who does change his mind, as we've seen already with things like Colombia and tariffs, for example, so they can come on and off very quickly. So there's a lot we don't know. But it is very clear the direction of travel on this. He does see tariffs as a tool, a political tool, an economic tool, and they're ones that he does intend to deploy. We just don't know exactly in what fashion.
I want to ask Christian about some possible tariffs in a second. But Roz, how would you describe the last 2 weeks? Because even listening to that press conference yesterday after the air crash, it's it's unclear whether any of this is scripted, what his agenda is. He's bringing DNI in a lot, so it's very difficult for investors to just try and understand what his end game is.
Well, it's very Donald Trump. It's reminiscent in some ways of his first term as well. He moves between a lot of things very quickly, and he does seem to speak a lot off the cuff. And as a president, he speaks often, as we can see, multiple times a day. And the question is, what do we make of all of that? He's come up with an awful lot in the space of just over a week. And, blizzard of executive orders, changing this, doing that, having to walk some of that back pretty quickly, because again, when you come out with all these big announcements, you can have unintended consequences, and that's what we saw with that freeze on funding, an immediate impact, and having to really walk that back. And so it's working out in all of this, what are these announcements are going to get through, what's going to stick, what's subject potentially to protracted legal problems. A lot of these things are coming up for legal challenge. What can he do through Congress? What does he do directly? How much executive power does he deploy? So for markets, it's like going through all of that to work out, how do you trade on that? But generally people have been pretty upbeat on the outlook for the US, for deal making, for the market. So maybe that's the longer term perspective.
Yeah, and I guess, Christian, it hasn't been, as disruptive as it could have been in the first 2 weeks, which is why there's a belief in the market that this is a president that wants a deal that's transactional and that there won't be that much trade disruption. What if they were wrong?
Well, if they're wrong, then, we will get a negative surprise. I think so far as Ross said, he's mercurial. I think that's transactional, right? Because in the last minute, if there's a deal that's being proposed, he may grab it. We now know that he's already considering possibly not to put on tariffs on oil, even if he does put tariffs on Canada and Mexico, because the truth is he says he doesn't need their product, but actually the U.S. refineries do need a Canadian oil, at least in the current situation. And, we think the lesson of the first, almost 2 weeks now has been that he is continuing to be the transactional person. Now, what we have to watch now in the background is whether they are considering these universal tariffs. That's something Scott Bessent has now alluded to, the new Treasury Secretary. And that will be more going in the direction what some people in his campaign, some of his advisors say, we want to profoundly change the global trading system and basically impose tariffs on everyone. And that kind of systematic collection of revenues and having them imposed that we haven't seen yet. The question is, will he pull through with that?
Yeah, but what does that mean for the Fed and dollar?
Well, we've seen what it meant for the dollar, because when he didn't come out right away with the IEEPA, this emergency measures to impose tariffs on everyone, the dollar fell. So there was a lot of expectation on tariffs baked into the dollar. So if he was to come through with it, we think it would mean further dollar strength. That's what theory tells you, and that's what markets tell you.
Okay, thank you both. Ross Matheson there, our EMEA News Director. Christian Keller from Barclays Investment Bank stays with us. Now, onto the tech space, and Bloomberg has learned that U.S. officials are investigating whether Chinese AI startup DeepSeek got around American export controls to buy advanced Nvidia chips, possibly through third parties in Singapore. Meanwhile, Apple shares also rising in pre-market trading as the chief executive reassured investors that this quarter's sales will rise in the low to mid-single digits. Now, this comes after the company's greater China revenue and iPhone sales actually missed estimates. And Intel also up after its sales and profit outlook fell far short of expectations. So for more on all of this, let's bring in Bloomberg's Tom McKenzie. So, Tom, first of all, on DeepSeek, what do we know about this probe?
Well, we know that the Trump administration has started the first efforts to try and scrutinise exactly what kind of chips DeepSeek were using and whether indeed they need to increase the restrictions on those chips into the Chinese market. We know, of course, the most sophisticated AI accelerators that are produced by Nvidia are not able, at least officially, not allowed to be sent into the Chinese markets. They have to get an export license, and they don't get them for the most high-end chips. What DeepSeek says is that they've been training this model on H800 chips from Nvidia, which used to be able to get into the Chinese market through a carve-out. That chip was designed specifically for the Chinese market. That chip is now banned since 2023. It's the H20 now that Nvidia can and is allowed to ship into the Chinese market. Nonetheless, at the time that this model was trained, it seems like they were legitimately using chips designed for the Chinese markets. That's the claim from DeepSeek. Clearly, the Trump administration is sceptical of that claim. They're investigating and potentially, according to reporting, could put in place further restrictions that go further down the line of Nvidia chips that have to then go for these export controls, have to get license approvals. Essentially, they're looking at further tightening the loop and noose around the Chinese market when it comes to access to these AI chips.
Yeah, it's very clear that the West and some companies have come out swinging. What stood out from the Apple earnings, Tom?
It was a reminder from Apple that they are seeing weakness in the Chinese market. So sales of the iPhone fell about 11% in the quarter. They did talk very positively, though, Tim Cook and executives, about the prospects in India, the prospects in emerging markets, and services for Apple came in stronger than expected. So think of the apps part of the business, think of Apple Music as well. That was a beat. And importantly for the market, and this was why you're seeing upside pre-market for Apple stock today, the guidance for the current quarter came in stronger than analysts expected. So, yes, there is the challenge in the Chinese market, particularly around the iPhone 16. They do not have the AI proposition there because they haven't partnered with the Chinese partner yet. So you don't get the AI functionality with the iPhone 16 in the Chinese market. Where you do get that functionality in the US, for example, Apple is saying they are seeing some pretty strong tick up there. That is driving a pick up at sales. They need to get a partner in the Chinese market to get that kind of growth. There's the domestic challenge as well. China's handset makers very, very competitive. Broadly, though, the guidance for the current quarter is what's leading to the upside in the stock pricing this morning pre-market.
Tom, thank you so much. Tom McKenzie there from Bloomberg. Daybreak. Coming up, we'll talk central banks after the ECB cuts rates for a fifth straight time. That's next with Christian Keller. This is Bloomberg. Well, Bloomberg has learned that the ECB may stop describing its monetary policy stance as restrictive at its next decision in March. Now, the central bank cut rates for a fifth straight time yesterday. Now, still with us, Christian Keller from Barclays Investment Bank. Christian, thank you so much for sticking around. There's a lot, right? There's the Trump tariffs. There's everything that's happening with DeepSeek and AI in general. And then underlying all of this is inflation concerns in central banks. Yeah. Where are markets getting their cue from?
Well, I think this time DeepSeek clearly outshone the central banks. I mean, people were very, very clear what central banks would do this week, the Fed and the ECB. I think DeepSeek is really was an interesting part. It challenged in a way the uniqueness of Nvidia. It challenged maybe the gap between the US and China in tech. But it also gave a positive message, maybe that AI is not that expensive, not that energy intensive, and it could lead to quick application of AI and quicker productivity gains, which is what markets are generally hoping for.
I mean, does AI fundamentally change our economies? And so are we closer to that with the findings of DeepSeek?
Well, we generally hope that they will do, and there's a big question mark. Most people think it will. There's a big question mark how quick that will happen. Right. And I think if you suddenly have news around this being cheaper and easier to implement, that in general you would think accelerates the implementation and therefore the hopeful productivity gains.
What's the next? When you look at central banks, I mean, I think the Fed still dominates everything, but there's so little policy to go on by that we're not 100% sure how much, higher for longer it stays. Is this really the kind of main disruption point that could hit markets?
The central banks, for sure. I think, right now markets say, look, the Fed will cut the market's price maybe 2 more times. We think they cut 1 more time. They still have somewhat of an easing bias. I think that came through. But if we were ever in the situation whereby, the inflation impetus was such that they cannot cut or even have to talk about hikes, there was no talk of hikes this week, that would really, I think, change the market's perception. No one is thinking of hikes yet, and that would really be, I think, a negative on markets in general.
I know through all of your research, Christian, and it's very simple and well put together. You talk about Japan, you talk about the China outlook, you talk about emerging economies. What is the one story that's more complicated to tell away from the U.S.? Is it maybe the China recovery?
I think China has been complicated, remains complicated. We have been quite, I'd say, pessimistic or on how they can reinvigorate growth. I think the news about DeepSeek won't change that. What we see in the data is that the real estate market and all the indebtedness around it that weighs heavily. We think Europe is an interesting story. I mean, whether there could be any new impetus on, through peace in Ukraine, maybe through political change. It will take time. But what I notice is that investors are, looking at Europe saying the sentiment is so downbeat. Right. Could that be the surprise at some point this year?
Could it?
I'm skeptical, at least not for the first half. I think it's very difficult if you look at politics where the good news should come from. And good news, I mean, really willingness in a way to undertake more fundamental change rather than just, changing small things in the policies.
I mean, there's also, I guess, the next couple of days are very critical in trying to understand the CDU and what Friedrich Merz does this with the vote on immigration, with the AfD. I mean, does Europe need a strong Germany, and does that completely depend on what happens February 23rd, Election Day?
I do think it weighs on Europe that there's so much uncertainty, not only in Germany, but also in France. And now in Germany, no matter where you stand politically, I think what you would have to wish the country is a strong majority, like a government that is stronger in governing than the last one was. And, what we see recently now, it seems more that we may not get that, because, Merz seems to have been losing a little bit. It's still early days, we have to see. But I think what we need is, as you indicated, a Germany that has a government with a vision, knows what it wants to do, hopefully then joined by France. And then they can also influence the EU, because this is, I think, what most people feel where the change needs to take place. Regulation, bureaucracy, etc. It's often an EU issue. Yeah. And there needs to be change, but you need the big countries, Germany and France, to do this.
Christian, I mean, I feel like everything does depend on the U.S. consumer, right? Given all of the weakness elsewhere. Are you seeing a strong labor market and consumer spending in the U.S. continuing in the next couple of quarters?
We do. We think it's softening somewhat. But if you look at the numbers, we got the Q4 data. It's a consumer that's still carrying the U.S. economy. The investment data was quite weak, but we think that was a one-off. We think actually we're quite optimistic on investment, picking up. There's a lot of optimism. But when it comes to it, the largest part of the U.S. economy is consumption, and it's the largest economy. The U.S. consumer continues to count. And we think, she and he will carry global growth, at least for the next few quarters.
Mainly despite tariffs, or again, are there so many question marks about whether, I was even listening to, I think, the Commerce Secretary saying it's not clear whether tariffs are inflationary. I mean, it's almost textbook that, prices must go up if you put a levy on it.
I mean, it's not clear. Of course, you could have a strong dollar rally and, there may be, adjustment in margins by others, but I think most evidence points towards them being a somewhat inflationary. What we are quite concerned, you mentioned the labor market, is also on migration. Again, apart from the politics, you're reducing supply, in a labor market that has greatly benefited the U.S. economy because it was able to meet the demand of labor without having the inflationary impetus. If you reduce the supply of labor, that in principle should be inflationary.
Christian, thank you so much for joining us today. That was Christian Keller, head of economics research at Barclays Investment Bank. Now, coming up, U.S. investigators have successfully recovered black box flight recorders from the American Airlines regional jet that collided with the U.S. Army helicopter in Washington. So we'll have the latest next, and this is Bloomberg. Well, U.S. investigators have found the black box flight recorders from the American Airlines regional jet that crashed in Washington. Now, we want to warn the audience that some of you may find this video graphic. It captures a moment that the jetliner and a U.S. Army helicopter collided. Now, 67 people were killed with no survivors, one of the deadliest U.S. air disasters in decades. Now, for more on this, Bloomberg global aviation reporter Benny Camel joins us. Benny, what do we actually know from the NTSB findings so far?
So the NTSB came out yesterday saying that they have retrieved the black boxes from the wreckage of the aircraft, the regional jet that collided with the helicopter. And that will be a crucial part of the investigation because they contain audio but also technical data on the flight's performance and its altitude. And altitude is actually one of the areas that are in focus here. Was which one of these planes was out of position, as it were? Was it the helicopter? Was it the aircraft? There are some reports that are sort of zeroing in on the helicopter, whether it was outside its flight envelope and whether it was too high, whether it should have been lower. That's one of the lines of inquiry that will be pursued. The NTSB is leading this, and they have been quite clear last night that they need time for this, so this is not going to be a quick turnaround. They work very methodically, very meticulously. There are professionals, and they don't want to sort of rush to any conclusions here. This is obviously a very closely watched investigation, partly because of the magnitude of the catastrophe here, but also because of the political implications. This happened in Washington, in a very densely populated part of town. This is just miles away from the White House. As we know, President Donald Trump has already weighed in. So this is going to be very closely watched.
So, Benny, Trump essentially blamed DEI and Biden for the crash. What's behind that?
Well, it was a fairly raucous press conference yesterday where he came out and said, look, on the one hand, I don't really know what happened and I have to speculate. It could have been this, could have been that. But then he went into a line that sort of seemed to blame DEI and, as an extension, Biden, saying, look, we've hired the wrong people for bodies like the FAA and the NTSB, and this will stop. So he drew a direct line between the crash and the hiring principles that have been going on under his predecessor. Now, that's obviously a fairly brazen politicization of this crash and something that normally doesn't happen. As I said, the NTSB or any investigative body usually takes the lead, and then everybody else stays out of it and stays quiet because you don't want to create a narrative that will then be very difficult to walk back, and that's what Trump has now done.
Benny, thank you so much. Benny Camel there with the very latest, of course, on this crash. Now, coming up, we'll look at how the Chinese startup DeepSeek stunned the world this week with its new AI chatbot. We'll discuss how the global AI race is shaping up. And this is Bloomberg. Good morning, everyone. Welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Tariff showdown. President Trump is set to unleash his first wave of tariffs tomorrow on Canada and Mexico, while also threatening China. Bloomberg learns the U.S. is probing whether DeepSeek bought Nvidia chips through third parties in Singapore to avoid import restrictions. Plus, Apple rises in pre-market trading with a better-than-expected outlook, helping to offset disappointing sales for the iPhone and its China business. Now, Bloomberg understands that U.S. officials are investigating if DeepSeek got around American export controls to buy advanced Nvidia chips, possibly through third parties in Singapore. Now, meanwhile, Bloomberg has also learned that OpenAI is in talks to raise as much as $40 billion in a funding round led by SoftBank. Now, the ChatGPT maker is in talks to raise funds at a post-money valuation of $300 billion, assuming OpenAI raises the full amount. Now, it was valued at $157 billion in October. So to discuss all of this pretty hectic week for global tech is Parmy Olson, tech columnist at Bloomberg Opinion, who's also the author of the award-winning book Supremacy, AI, ChatGPT, and the Race That Will Change the World. Now, she says that DeepSeek's new AI model that may threaten the dominance of U.S. tech giants like Meta and OpenAI by fueling even greater momentum for the open source movement in other parts of the world. So, Parmy, thank you so much for joining us. First of all, congratulations on the book. I know it's been like a bestseller, and I really urge everyone to read it to try and understand. I mean, these are people racing to really change the world, for good or for worse, right? But it's human people. Yeah. And I wonder whether DeepSeek has kind of changed. I mean, it feels like it's upended the race this week. How does it change, how we view it?
People have asked me if I would update the book. It came out about, I filed it about less than a year ago. The first time I've said yes is this week, because DeepSeek is such a fundamental change to the economics of what's going on. Now, there are still a whole bunch of unanswered questions, but 100%, the fact that they were able to train an AI model for a fraction of the cost of what OpenAI and Google and Anthropic and all the other big AI players are spending really shows that you don't necessarily need a lot of money to build AI. Until now, companies like OpenAI, that's been their moat. That's been how they differentiated from others. The fact, as you mentioned, they could raise all that money, and no one else can do that. Now, actually, you don't need to raise that amount of money to build AI.
So, I mean, the question is, and there's a lot of investigations on whether, for example, they used some of the Nvidia chips through Singapore. There's also questions whether they, frankly, ripped off some of the OpenAI. Does this stuff even matter? Because once you've proven that you can do it on the cheap, then it changes everything anyway.
Yes, I suppose it does. But those unanswered questions are important as well for policymakers, because there's been this real question of, well, maybe the U.S. shouldn't have had export controls on Nvidia chips, because then China and DeepSeek, for example, and other companies wouldn't have been forced to think out of the box and innovate with low-quality chips. But if you follow that same logic, then the U.S. should have limits on GPU sales to American companies, because that would force them to innovate. So it doesn't necessarily make sense. And at the same time, as you just mentioned, Bloomberg reporting has shown that it's possible that DeepSeek got around the export controls by just buying chips from third parties in Singapore. So I think that raises a lot of questions about whether any of those kinds of sanctions even work in the first place. Also, this question of, we saw earlier in the week, Nvidia's stock price fell by something like market valuation by almost $600 million, $600 billion, sorry, an incredible crash for Nvidia. But there's also now people are saying, well, actually, if this spurs more competition among smaller businesses to build AI because it's cheaper, that means they'll buy more GPUs from Nvidia. That's actually good for Nvidia.
So, Parmy, I mean, one question: if they did get their hands on, and there were reports about the number, if they did get their hands on Nvidia chips, does it change the underlying business model that they offered?
I mean, I suppose it does. It depends how many extra they were able to get. From what we've seen in reporting, something like 50,000 is the number that's going around. They did it for $6 million, which is very little when you consider something like someone like OpenAI will spend $100 million, say, to train. On the other hand, one thing they haven't figured out is inference. So training is very cheap, but actually using the AI model still requires a lot of GPU chips and is still very expensive. So that's another reason that NVIDIA is still needed in all of this.
So does it democratize? And I've heard, an economist was in earlier saying, look, if this is cheaper and we can all use it, then it will almost democratize AI. It'll be more of a force for good on the cheaper side because so many more people use it. There's still, I guess, safety and security, national security concerns.
Yes, absolutely. But I agree with that. I agree with that first part about democratizing. And it's so funny because tech companies in Silicon Valley use that word all the time, that we're democratizing the use of technology. I'm pretty sure OpenAI has used that term, but they don't actually reveal the details about how they built their models. No information on the training data, despite the name OpenAI. DeepSeek is way more open than OpenAI because they've put their blueprints on the internet, and now Meta's engineers, OpenAI's engineers are all scrambling to try and replicate what they did. It's possible in the next few months we'll see more efficient models coming from American companies now.
Parmy, and I know I need to thank you. Like, we did a podcast together. It was, really enjoyable for like 30 minutes trying to understand where this ends up. I mean, was this almost like a foreign policy from China? We don't know if the Chinese government, played into it, but I feel like the timing is quite perfect for the Chinese.
It really was to have come right after this announcement of the Stargate project, that how much money is just going to be spent on infrastructure projects for AI, earnings announcements this week in which companies have to talk about their CapEx spending on AI. It's a very awkward timing for American companies and for the American government. I don't know if that was planned, but it certainly is awkward timing.
I mean, how can the U.S. respond? So again, we've heard OpenAI. They're like, investigating. They're raising $40 billion. Does this just equalize? I mean, does this just blow, the U.S. out of the water in terms of a race, or can they come back from this stronger?
Oh, I don't think it blows anyone out of the water necessarily. It's absolutely created panic. But the best thing that American companies can do is compete. Right. And that's what's so great about this moment, in spite of how frightening it might be for a lot of shareholders and businesses. Now, for example, tech companies in the U.S. have been so focused on making the biggest model. There's this kind of ego-driven race to get the biggest cluster of GPUs, for example, and not enough on helping businesses find ways to make AI useful for them and design good products. That's actually been quite neglected over the last year. But that's a way that American companies can absolutely differentiate from these Chinese alternatives, for example. So hopefully this will be a wake-up call in terms of not focusing so much on who's got the biggest model, but actually helping and building good products for businesses.
Parmy, is this limited to large language models, or could it actually change the scope of research and everything else we know AI will be used for?
I think for now it is limited to large language models, but also image generation. DeepSeek has come out with an image and I think an image analysis and image generation model. So for now it's AI, generative AI, but who knows where that could also spread to.
Parmy, thank you so much. Bloomberg Opinions, Parmy Olson there, and author of Supremacy, AI, ChatGPT, and the Race That Will Change the World. You may add a new chapter, right, on DeepSeek. There you go. And you can hear more from Parmy on this week's In the City podcast. She joins Allegra and I to discuss what DeepSeek's big reveal could mean for companies outside of Silicon Valley, including here in the UK, and what Britain must do to have more influence in the global AI conversation. You can listen to that wherever you get podcasts. Now, the parents of FTX co-founder Sam Bankman-Fried are said to be exploring ways to secure a pardon for him from President Trump. Bloomberg has learned that Joseph Bankman and Barbara Fried have had meetings with lawyers and other figures considered to be in Trump's orbit about clemency for their son. It's unclear if they've reached out directly to the White House. Now, the one-time crypto billionaire was sentenced to 25 years in prison for fraud. Coming up, a showdown in the German parliament as a favorite to become the next chancellor is accused of breaching a firewall by turning to support from the far right. We'll have the details from Berlin next, and this is Bloomberg.
February 6th. After years of stagnation, Europe's largest economy is on the brink. But Germans will soon have their say.
Tune in to Bloomberg for conversations with some of the country's most powerful voices before the votes are cast to find out how the next government can get Germany back on track.
The Germany Election CEO Briefing, February 6th at 9 a.m. London time. Only on Bloomberg Television. Context changes everything.
The German parliament is set to vote on a hardline immigration bill, which has caused a stir not just because of its tougher stance, but because Friedrich Merz, the favorite to become the next German chancellor, is relying want support from the far right to get it through. Now, he's faced a fierce backlash, including accusations that he's breached a firewall aimed at keeping the far right AfD from power. So the debate is taking place right now, and Bloomberg's Oliver Crook joins us from Berlin. Ollie, this is a pretty big controversy. I think a lot will depend on how Merz and the CDU play it in the next couple of days. What do we know so far?
Yeah, so listen, Francine, I think this is probably the most consequential development that we've had since the government fell, basically back at the end of last year. And really, this is going to be, I think, really very defining in terms of what happens in this election. And just to recap for people what's going on here exactly, it's the CDU ahead of this election trying to put forward this immigration bill, much harder stance on immigration, and would be, if they go forward with this in the vote that's going to start in about, a few minutes' time. They're debating right now for about an hour, then they'll cast their ballots, and we should get the results at about noon or 1 o'clock local time. This would be the first time, Francine, since the Second World War that the AfD, that an extreme party, would vote with a mainstream party. And this is, of course, what has caused a lot of controversy here in Germany, has caused thousands to take to the streets and protest over the last few days. And the way that Friedrich Merz is basically billing this is saying that basically I'm not going to let, just because people I disagree with agree with a good idea, get in the way of a good idea. But of course, this is without really sort of precedent within the sort of modern times of Germany here. And of course, it could colossally backfire. And this is something that we're going to have to watch very, very closely going into this weekend, because, Francine, this has the real potential to change the polls in a radical way.
Yeah, so what's Merz's plan here, and how is it going to pan out?
Yeah, so listen, from his own words, what I think is interesting is, regardless about what you think about how he's going about this, Friedrich Merz is dealing with a problem that is a serious problem, not just in German politics, but across politics in the rest of Europe. You have the far right coming up, getting a huge amount of support because of some level of policies that they want on immigration, and he wants to prove that basically they can be tough on immigration. And what he said yesterday, as recently as yesterday, is that he wants to ensure that the policies of his party, of the CDU, are also corrected to such an extent that a party like the Alternative for Deutschland is no longer necessary in Germany. So basically trying to tack to the right, particularly on this issue of immigration, in order to undercut some of the AfD support. Of course, Francine, that could just backfire, because some people will say you're just trying to pander to the AfD. We actually want the original thing. But we've had backlash not just from parties outside of Friedrich Merz. We had Angela Merkel wading into politics. Very rare for her to do so, coming out against this. We had a number of church groups, a number of the sort of religious groups within Germany as well. I mean, this is the Christian Democratic Union, the CDU, coming out against this. So this could really backfire. On the one hand, is it Merz just being sort of more pragmatic and dealing with the reality of very fragmented German politics in order to sort of consolidate some momentum? Or is this basically, as some are saying, he's basically lighting the party on fire and showing himself to be very, very unpredictable? One of the polls that we saw a couple of days ago, and I'll end with this, Francine, just 2 days ago, is we saw within the polling for the first time only a 6-point spread between the CDU and the AfD. We should say it's very unlikely that the AfD would get the #1 spot here in Germany. That being said, a couple months before the election in 2021, the CDU had been leading with 12 points of the SPD, and they managed to turn that around in that short period of time. But again, going into this weekend with an absolute bomb for German politics, we'll have to see what the polls say on Monday, but it could really materially change things in this election in Germany.
Yeah, definitely could. And you could see some of the vote splitting, of course, going to the Greens and the SPD. Ollie, thank you so much. Oliver Crook there in Berlin. Coming up, how much are bank bonuses actually worth? And why do they differ from U.S. and European banks? Well, that's the topic of today's Big Take. And that story is next. This is Bloomberg. So, how much are Wall Street bank bonuses really worth? Well, that's the topic of today's Big Take, looking at the divergence between U.S. and European bank bonuses. For more on this, Bloomberg's Jenny Serrain joins us. Jenny, first of all, it's a fantastic piece. You can read it on the terminal. We've pushed it on social media. I mean, and Bloomberg spent like months trying to do this one-of-a-kind analysis. What did we figure out?
Yeah, I mean, it was a labor of love, as it were. What we really figured out is that the number that these bankers and traders are told on compensation day is really not usually what they end up with several years on once their bonuses finally fully vest. And some of the big takeaways that we revealed was, for U.S. banks, a lot of times those guys end up walking away with a lot more than what they're promised. And for the folks on this side of the pond, they end up walking away with a lot less. So there was a pretty big divergence between the two sides of the Atlantic.
Yeah, I mean, and we have, graphics and charts, and there's a really, really, difference. Like the stark difference between the U.S. and Europe is quite, crazy, actually. Is there anything that the Europeans can do?
So it really gets down to stock prices. So this is why you hear folks like Sergio Armati or Christian Suing, really talking about, trying to turn things around, get their returns up, make that case to investors that they're on the right path and kind of doing the right thing and that they're able to compete with the likes of a JP Morgan or a Morgan Stanley or Goldman Sachs. I think the proof will ultimately be in the pudding. And to be fair to them, the gap has been closing. So they're getting it up a lot more in recent years, and especially now with President Donald Trump in place. I think folks are really expecting bank stocks to be on a tear these next couple of years. So this bonus season should be an especially happy one for bankers and traders across Wall Street.
Yes, it's Wall Street. So, we're in the middle of this compensation season right now. And so a lot of happy faces and celebrations in New York and basically Wall Street.
Yeah, no, I think that's exactly right. So I think it's the last year is really based on kind of what are the forward-thinking expectations for where bank stocks will go from here. And because those expectations are so high right now, that's why you're seeing that gap really narrow. And so it'll be sort of interesting to see if it all comes to bear. One of the things we also note in our story is, fortunes can change on Wall Street really quickly. So just a few years ago, Credit Suisse was talking about giving out, some really nice stock-based awards, trying to keep folks happy, keep them retained. And then just a month later, they were non-existent. So things can turn around really quickly on Wall Street. And so even though everybody's feeling really good right now, things can change in an instant for these traders and bankers.
And Jenny, I mean, there's so much anxiousness, frankly, in Europe. Are bankers worried about their jobs instead of bonuses?
Yeah, no, I think that's actually a really good point. This week we've had a ton of news. You had HSBC announcing that they're going to get out of some parts of investment banking. You had, I think, Deutsche Bank said it's going to be the year of reckoning, 2025. So I think absolutely. I think a lot of bankers are on edge, and that's, I think, even more important why this calculator and what we've given readers today is so cool, because if you're having anxiety and you want to kind of know what's my financial picture a couple of years out, that's one of the things that this calculator can do for folks.
Okay, amazing. The calculator is pretty cool, so you can go and check it out depending on where you're based and also, I think, who you're employed by. Jenny, thank you so much, Jennifer Serain there, our team leader here in the UK, with that big take on bankers' bonuses. Now, this week we have the Fed, and we had ECB rate decisions, while the FOMC held, the European Central Bank cut by 25 basis points. Now, bond traders are focused on the potential impact of Donald Trump's tariffs threats on inflation in both regions. Now, for more on this, let's bring in Bloomberg's MLive's Van Ram. Van, thank you so much for joining us. I mean, I'm looking at Treasury and I'm looking at dollar. What are your predictions?
Morning, Francine. So good to be talking to you. I think it's hard to be constructive on treasuries at this point, because if you look at core PCE, we are getting the core PCE reading for December in a couple of hours from now. So what that is going to show us is about a reading of 2.8%. Now, in the past 1 year, if you look at the average, we have been bobbing around exactly 2.7 to 2.8% range. Now, the Fed factored in a rate of 2.5% for this year, but that's a tall order yet because, as I said, core inflation really hasn't budged at all. And if core inflation stays around 280, and then you add a neutral rate of 100 basis points, which is what the Fed estimates the neutral rate to be, then you're already talking about a neutral Fed funds rate of 4%. So we are almost already there. So the room for the Fed to be cutting rates is not very much. Therefore, that's going to cap the downside yield on 2-year treasuries, and that will also limit the any rally in the 10-year space. Francine?
Van, you're one of my favorite people when it comes to modeling. Is it impossible to model anything that comes from, Trump policies and the Trump administration so far, because we don't know whether they're targeted, and also the president is looking for a deal, so we don't know where we end up in any of that, and so the impact on inflation, the range, I imagine, could be quite big.
Yes, absolutely. I mean, we don't know whether he is going to follow through on his threat of 25%, for instance, with Canada and Mexico. And if he does, what the fallout will be. and whether he's going to use that as a negotiating chip, as we saw happen with other trading partners recently. So the question is how much of an impact, inflation impact it's going to have. My reckoning is that it is going to have a significant enough inflation impact to deter the Fed from cutting rates further. Now, the Bank of Canada did a simulation in 2019 when Trump was back in office then to see how much of an impact tariffs would have on the Canadian economy. And they reckon that, it will set GDP back by 6% and cause the loonie to tumble 25%. I don't think that the markets are prepared for the loonie dropping anywhere near on that scale at the moment. So I think there is huge shocks coming for the FX and the rates markets in the coming month if Trump follows through on his threat.
Yeah. Ven, why is it so difficult for the ECB, governors, but also President Lagarde to give us an indication of where the neutral rate is?
Well, I mean, she's playing her cards close to her chest, I think. I think she's got a pretty good idea as to where the neutral rate, according to the ECB forecasters researchers is. That paper is coming out on February 7th, but I suppose President Lagarde has some kind of inside track on that. I think she said in Davos that the neutral rate is somewhere between 175 and 225, and no one is more familiar with Davos than you, Francine. But I think that, if 175 to 225 holds, I think that the ECB would get to 225 and then decide to wait from there on before moving further. And that will depend on what we get with Trump and tariffs.
Ven, as always, thanks so much, Ven Ram there from MLive. Now, up next, Bloomberg Brief, Manus Karani in New York. I know he'll also talk a lot about dollar levels and treasuries. This is Bloomberg.